Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day, all. Ira Epstein of Linn & Associates with your metals market update for this Tuesday, Halloween, October 31st, 2017. And right now, where we're at in time is about 4:45, so they've already closed many of the markets. I'm just late today. I'm swamped with what we're doing here. And to make a long story short, these are the settlement prices. Now, when we come to the chart action, you get to see what's going on, and this is the weekly chart of closes, and the market most certainly has lower highs and low closes. Off this low, you're up about $2 so far for this week off that break low. Now, we have an awful lot going on. Today, you had the Bank of Japan come out. They left their monetary policy unchanged. We have the Bank of England on Thursday. Tomorrow, the U.S. Federal Open Market Committee gives us our monetary policy. No one's expecting any changes in our policy. We're still counting about an 85% probability of a rate hike in December. When we also take a look at Thursday, we get the Fed chairperson that President Trump is going to want to run the Fed. Is it Ms. Yellen? Is it going to be Mr. Powell, Mr. Taylor? We don't know. We'll wait and see, as he said. Tomorrow, important, we get the tax bill. Nobody knows what that looks like, but at least it's going to be a proposal, and we'll see how much infighting there is once it's released. Do the Democrats support it? Do the Republicans? Who knows what's going to happen from there? And then Friday, we get the all-important jobs data. So I got a mouthful. I'm doing this all from memory, but you got to pay attention to it because it impacts the gold market. Why? Because you look to see how the dollar reacts in financial markets. Right now, you're in a longer-term trend down on the weekly chart. When you come to a daily area chart of closes, here is the 18-day moving average of closes, and this is how the settlements have gone. So you're off the lowest settlement on a daily basis by about 90 points, not saying very much at all. You can see you had a bounce, it failed, and you're trying to break down one more time. And when you go to the swing lines, you got lower highs, lower lows. You're in a downtrend on the swing line. The market is trading underneath the combination of the 18 and the 100-day moving average of closes. That is bearish. So far, they're not converging yet towards each other. If they do, you can get even a further potential in what's called a bearish crossover. It's when moving averages like they did back here. The 18 got over the 100. You see where I'm pointing to you right through here? And that seemed to have carried the market up. What if you get that on the downside? Will it work? I don't walk on water. I don't know. But I can tell you it would be another bearish element to the chart. When I look at Bollinger Bands, which it's an algorithm designed to give you an idea where potential support and resistance points are. That doesn't mean the market can't break through it and run against it to the upside and downside. In fact, here's one thing that I can almost tell you, few things I can guarantee. The longer a market goes sideways, eventually it hits that one of those 2 points eventually, okay? Go to your corn chart. You'll see exactly what I'm saying. But in this case, next support, if it breaks down, could be the lower Bollinger Band at 1263.90. It's not any of these key averages because the market's under them. Momentum-wise, the market is clearly in an oversold condition, as I define it, because I view any closes under 30 as being oversold. They can change to locking in a trend if both numbers were to get under 20 and go sideways for several days or more. It's not doing that. So I'm not going to say momentum's locked in or embedded. The trend is down, the bias is down, the momentum is down but oversold. When we come to the GLD, the popular gold ETF, we can start here. Oversold just like the futures. Clearly lower highs, and I'm showing you the most recent highs with these red arrows, and then the market came down to the lower Bollinger Band, got back to the 100-day average in green, and down. When we take a look at the futures, they did the same thing, back to the 100-day average and trying to break down. If the market were to get over 1279, the last Bollinger Band, it still has to close over 1284.10 to turn the market friendly. That's $14 away, so it's quite a ways off. when we come to GDX, which I've discovered over years of watching it, and I'm not talking forever, ETFs aren't that old, it seems to, in certain cases, certainly not every one, there are times when it leads the market, times when it follows. For whatever reason, and I don't have the reasons for you, at this point it seems to be the market that is setting up a tone, and I'm finding that the futures are, I think, following it. Am I right? When I look at it, you're under the 18, the 100-day average, you're riding the lower Bollinger Band, and if you'll notice here, in the momentum, both numbers are under 20. We go to yesterday, if I can get the computer to do it. It seems to not want to. I wish I could get it to. Let's see if I can come back to it. There we go. Both numbers are under 20. The day before they were not, and the day before they were, and the day before they were not. You're just oversold. That's my point. You're not betting at this point. The ratio of silver to gold, silver is weaker than gold. And this number on the side is how many ounces of silver you'd need to take to a store in a beautiful fairyland with no markup at all, and you're going to trade in your ounces of silver for an ounce of gold. And you're up to 76.11. You were recently at 74.76. The lower the number, on a relative basis, the stronger silver is to gold. The higher the number goes, obviously the gold is stronger than silver. Here's the silver chart, pretty bearish still. Lower highs, lower lows. It failed recently, and I'm going back to the first part of October, almost to the middle of the month, at the gray line, which is the 200-day moving average of closes. Now the 100-day is acting as resistance, with Bollinger Bands acting as potential support. Again, an oversold market. Copper market. China's got a bit of a slowdown. Now they're still growing, but the rate of their growth has been slowly ebbing back. And as that's gone on, copper peaked out up here, and it's working its way lower. Let's understand, we're not talking China's in a negative growth. They're still growing, just not as fast. So the resistance now is at the 313.75 level. Let's round it. Lower highs, lower lows, bias down, and momentum, because you got one of the readings today under 30, is finally in an oversold zone. In the platinum market, crystal clear to me at least, is that the 18-day average is acting as the resistance point. Each rally back up to it now is there. My theory on the 18-day average of closes is that it's the line in the sand. When the market's under it, it has downside bias. When the market's over it, I say it has upside bias. Right on it is neutral territory. We have a market that's got downside bias, it's oversold, and in a downtrend. Sideways action. There's one metal market that is strong, and I've been pointing this out. This market has stayed over the 18-day average, unlike the others that we're looking at. It's got a pattern of higher lows and higher highs, and momentum has been squeaky, either sideways or trying to lift now. If it lifts more, it might be able to get up to that upper Bollinger Band. Where's the support? Back down at the 18-day average of closes, which is now above the last break low. So I'm still seeing pros supportive of that market, in my opinion. Dollar index. Now it gets hard because we get the FOMC statement, the new Fed chair, jobs data. So the game gets a little harder right here. Notice how the 100-day average in the green and the 18 are coming together. If you get a move where the red gets over the green, it's called a bullish crossover, then it'll be up to the market to prove it can work even higher. Resistance, 94.76.5. And I'm calling the trend up. Higher lows, higher highs. There's a but. Tomorrow, if you were to take out 94.32, today's low is 94.35, you could end up with a pattern of lower highs, lower lows. So that is something the market will look at. It's going to be a rough trade tomorrow as the market tries to figure out just exactly what to do going into the 1 o'clock Fed statement. So let's talk about what we do. I don't know if you've ever used what's called a pivot point. What a pivot point is a mathematical formula that ends up giving you a center line. Think of that as the neutral zone. Resistance points, 2 of them above the market, 2 below. Can you have more resistance points? Of course you can. In fact, Forex traders, a lot of them claim that they like to use more. Whatever they're going to use. But it's an interesting tool if you're an in and out trader during the day, because what we do is with 2 videos, we teach you first the formula, and you don't have to compute it. Most charting software packages have pivot points. You plot it, and then I teach you on a second video how to apply it. I'm going to have a third video. I keep telling you about it, and it's going to tie momentum into it, and I think you'll find that fascinating. The reason I haven't decided to release it is we have a whole new website coming out. When the website comes out, which will probably be in the next 10 days, business days, I'll be ready to release that video just about at that time. So that's why I'm not releasing it yet, but here you go. That's how you get it. How do you get it? Call us. You can go to our website. You'll see a carousel of free offers. This is one of them. You can click up here if you're watching me on YouTube. And if you're on other websites, underneath us says, click here for Ira's free information. Do so. Enjoy it, and I will talk to you all tomorrow.